Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, May the 14th. The year is 2023. Let's talk trading. It's time for the weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. And as we start the week off, let's remember to have risk management in place so we don't lose any more than we're willing to lose on any one single trade. Taking a look at the weekly, we are 8 pips above the open, 6 off the high and 18 off the low. Obviously, not much range so far. We're a little over 7.5 hours into the trading day, and all but one gap has filled. Zooming out to the monthly, 92 pips below the open, 221 off the high, and 23 off the low. We are below the opening range for the month, and we are putting in the opening range for the week. Looking at the year, we're 369 above the open, 221 off the high, and 656 pips off the low. Notice we had an inside bar on the weekly 4 weeks ago. We are in that area. We're still above the monthly inside bar from 3 months ago, and we are below the inside bar low from the daily inside bar from 10 days ago. Once again, hardly any range, only 24 pips so far. No pairs are over 100 pips in range. Now I'm really curious why that is on the Monday. You would think there'd be a little more range after almost 8 hours of trading. And for the buy zone traders, you can see we're about ready to hit that buy zone area. It's already paid off once for a few pips. See what happens the second time. Rats have noticed the range is too low. We can skip the rats for now. Notice we've already come through the monthly pivot. Daily pivot at 2478. Says near the pivot we want to short, near R1 short, near S1 we want to go long. Normally I have this on the H4 chart. I'm wondering why I had it on H1. Must have been looking at something. One thing I think I might have told traders last week, one of the trades I've been liking to trade is the breakout of the H4 highs and lows. Because if you look at the statistics, there's usually 2 or more pips to be made every time. It's almost like cashing in on a slot machine that's slightly rigged in your favor. But remember, these videos are for trading, or are for educational purposes only, and your trading results may be differ from mine. So looking at the daily, once again, we want to see if we can take out that pivot at 2478 today. The weeklies at 2524. And the monthly we've already taken out. In and out of that lower wick zone. You can see here we broke that low. So that means this day won't be an inside bar. And we went over the ranges last week. So we'll see we've had increase on the weekly range, 4 weeks in a row. So let's see if that keeps up. Should be interesting. For the momentum traders, you can see here we had a big push down, so you might think that the momentum might push down further, maybe testing some of these lows. Something to look forward to or anticipate. Looking at simple price action, notice on the M30s the ranges are pretty muted. Ditto for the H1. We did have 3 hours with over 10 pips, but once again, pretty much muted. Though you can trade the M1 lower high, higher low. Trading out of those areas can be profitable. You can see here we broke through a resistance, a 3-ball from 270 bars ago, and we're just breaking through another one and putting in a new one right here, just about. So might want to watch and wait and see if this pushes up. Though this time of day, this week, it's almost like watching paint dry. Notice we had a gap down, looks like that gap filled. We have a gap up, looks like that's going to need to be filled at some point in time. Just keep that in mind if you're watching this video. If this gap hasn't filled, you might want to aim for it. Range for the month, still 244. Nothing to write home about so far. And I was mentioning about the H4. So you can see here, you've got a pretty high chance of making 5 pips. We're talking 85, 86. It doesn't matter if the previous bar was green or red. That's pretty high percentages. So if you've got a nice size account and you only need, 5 pips to make a few $100 or more, these are the types of trades that happen. You'll get a couple of shots each session. So I trade from, like towards the end of London and then into the New York. So I can trade like 6 o'clock my time, 10 o'clock my time, and then I'm usually up maybe 4 or 5 o'clock my time. So sometimes, depending on if that H4 bar, the 2 o'clock H4 bar, if price is between the high and low, I might be able to get a breakout there. So I might get up to 3 opportunities a day taking those trades. But for those of you who are in the statistics, you can see here, when you're talking, 80%, 75% chance of taking pips, it's kind of hard to beat. And the thing about it is, this is for all the H4 bars. I didn't even put on the time. So if you look when it's more volatile, those numbers go up even more. Just something to keep in mind. Trade reminder. Haven't really seen anything from last change from Friday to today. Nothing much. One thing I want to share is something I read, and it didn't have anything to do with trading, but a lot of times things that aren't about trading sometimes can relate to trading. And I read something about rejection. And, I learned early in life about rejection. And what I learned was rejection to me means I'm in the game. I'm not sitting in the stands. I'm not on the sideline. I'm in the game. So, a lot of times, back in my 20s and 30s, I might see a woman I'm interested in. I would approach her and I might get rejected. Well, the thing is, she didn't know me. She just, for whatever reason, said no. And so don't take it personally. It's just like, hey, I was in the game, as opposed to, living out the rest of my life wishing and regretting, oh, I wish I would have done this because who knows what would have happened. So, there's a lot of things like that. Oh, and the thing about rejection is what that author was saying was that rejection is feedback. And so when I read that, I pondered and I read it again and I thought, you think about trading, every trade you put on gives you feedback. And a lot of times you might misinterpret the feedback. So that's one of the reasons I like statistics, because you put a trade on and you lose. You put another trade on and you lose. You put another trade on and you lose. Well, sometimes 3 losses in a row. So long as you have your stop loss in place and you're not risking too much, you have your risk management in place, you're still in the game. And so maybe you put that 4th trade on and boom, you make up for those 3 losses in one trade. Or maybe it takes you 4 trades to make up for the 3 losses. Point being, by looking at your statistics and knowing that over the long haul, you're going to maybe win 70, 80% of the trades that you're taking based on your method, then you can still keep going on. Because you haven't gotten anything to tell you that, hey, you need to change something. I'm assuming that you're following your plan, you're not hesitating, and, nothing that you did before you hit the button caused you to be in a position that is more likely for you to lose than win. On the other hand, if you've got a method and you're running your statistics and you're supposed to be getting 70 or 80% wins, or maybe even 50 to 60% wins, but you're only getting 20 or 30, maybe there's something you're missing. Maybe there's something about your method that you're not accounting for when you run those statistics. For example, if you're not taking all the trades, then your performance isn't going to be anywhere near the statistics. And if you're running statistics during times that you're not trading, well, that could throw it too. So for example, if you trade the Asian session, but you've got London, New York data in your statistics, you're going to be disappointed. I can guarantee you that. So the main point is that rejection is feedback. So a trading loss and win, they're all feedback, and you have to make sure you keep track of that feedback and you interpret that feedback properly. Because you don't want to fool yourself. You don't want to mislead yourself. You have to be honest with yourself, because that's all that really matters, right? So, fellow traders, that's just about it. And just to acknowledge, if we have any mothers who are watching this, hope you had a happy Mother's Day, that your kids remembered you. And when you're trading, I want you to remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.